Hello, everybody. We're here for the first of our series of Summit podcasts, and I'm pleased to say I'm here with my friend Michael Quinn, the founding partner of Q Advisors, the leading cloud and managed services investment bank in the US, and probably internationally nowadays. Michael, would it be fair to say, wouldn't it?
No, I think certainly by a number of deals done. Absolutely.
So it's a great time to be talking on this with all the activities that are going on. We're going to get into more detail of some of the deals and some of the things that are happening. But firstly, you're going to be a sponsor for the growth track at the upcoming CloudCom Summit. Could you give us a quick overview of what the areas you'll be discussing in your panels and what people can expect to learn from the sessions that you're running?
No, absolutely. Yeah, no, we're excited to be sponsoring both the launch and the growth track. And we're going to have two tracks. We're going to have a track that deals with M&A and financing. It's going to be run by my partner, Jerry DeHaven, who's as active in the space as anybody. And then I'm going to run the international track, really focusing on European roll-up opportunities and really where people are fishing to do that. And our panels are almost set. We've got some great companies who've been very acquisitive in the sector, both in the U.S. and internationally, like Chris McFarland, the CEO of Masergy. We've got some private equity guys going to speak on the panel as well, who've been very active in the space. So we're quite excited about it.
Great. And there's probably not a better time to be talking about this. Nearly a day doesn't go by with some sort of deal being announced. Most of them you're involved in, to be honest. But why are we seeing so much M&A, both on the supplier side and on the service provider side? What are the kind of key drivers? Why are we seeing it happening right now?
I think a few reasons. One, on the supplier side, and you obviously have had the Mitel deal this week with Searchlight. You had the Cisco BroadSoft deal. There's a few others in the pipe as well. You had the Swix deal that we worked on earlier this year. I think what's happening is people really are over any kind of fear about cloud adoption. And so what you're seeing is folks comparing suppliers who have very good and robust cloud products to those that are on-prem based and saying, hey, we really, these are good companies to bet on in terms of growth. And then you've got the older companies like the Avayas of the world who are now buying cloud contact centers. You're going to see pickup people who are specializing in fixed mobile conversion because there is just tremendous adoption of cloud as opposed to on-prem. And then I think on the service provider side, it's really twofold. It's a land grab in Europe, and then in the U.S., it's a synergy play. It's a consolidation play, right? If I'm an enterprise-focused customer, I may want a customer base. I may want to buy a company who has other types of products and solutions that'll appeal to that. And so I think those are the driving forces behind both the European and the U.S. M&A activity. From our end, what's interesting, there's as much private equity activity as there is strategic.
So if you're listening to this, Michael, and you're a service provider right now and considering either acquiring or selling your business, do you think it's a good time? I mean, is it a good time? Do you think the valuations have peaked on some of these businesses? So that's one of the reasons we're seeing service providers looking to sell. Or is it a good time ready to do something like consolidate other providers, like what we're seeing in Europe, where people are trying to consolidate all them or to provide a European service? Is now the time to sell for some of these guys? Is it going to be the peak of their valuation, do you think?
I think between now and 2020, the next 2 years, it's really going to be a land grab, both in terms of bigger companies acquiring smaller businesses to get a geographic or product supplement, or synergy plays. And so if you're a 10 to 20 million euro, pound, or US dollar revenue company, it's going to get harder and harder to compete with the guys who are 2, 3, 4, $500 million, just in terms of their purchasing power, their marketing spend, and the like. And there's an opportunity, given that there's so much private equity roll-ups going on both in the US and in Europe, that a lot of the smaller company owners and management can get 2 bites at the apple, right? Maybe they sell a majority, 60, 70% to a buyer, and then take some stock back end, right? So that they get to participate in the growth of the larger company as well.
So, if I'm going to wait until 2020 to sell my business and I'm trying to build value in my business, we see various valuations out there from people like Ring at the top end and others lower down, which look quite amazing in terms of the differences. What are the areas where, you should try and build value? What are the things you should do that banks and people are going to look at in terms of what a service provider needs to have a high valuation? What's the areas that kind of listeners on this podcast should focus on?
Yeah, I think if you're looking at KPIs that both strategic and financial buyers look at, are 5 or 6 of them. One is ARPU. What's the size of the client that you're billing? If you're at $2, $3, $4, $500 a month, it's very different than you're at $5,000 a month, right? Second thing is, how many services are your customers taking, right? Because that affects churn, but it also affects the ARPU. Third is growth rate, right? There's this idea of the rule of 40. Can you grow? You look at your EBITDA margin plus growth margin. Are you a fast-growing company that's not profitable, like a Ring Central, or are you a company that's a bit more balanced, a little less growth, but you're adding money to the bottom line? The other thing is, do you have a proprietary or defendable technology? And the last thing that we're seeing a lot of is kind of a focus on API integration, because I think there's a realization that you don't have to build everything yourself, that you can integrate with best of breed solutions, but you need a platform that's facile enough to do that. And then perhaps lastly is, depending on what market you're in, like in Germany, you need a hybrid solution, right? And if you look at the guys who are doing well, Swick and Starface, they have both cloud, virtual, hybrid, and on-prem, and you need that.
Well, so we couldn't really go through this podcast without talking about what happened last week. We've obviously seen Mitel Deal announced. Why do you think somebody like a partner like Searchlight would look to invest in somebody like Mitel? Is it because they can see some extra value they can drive out of it? Why would you think somebody like those guys would look to acquire Mitel?
So the Searchlight guys are one of the smarter telecom and software investors in the U.S. and globally. Historically, they've been much more on the service provider side. So I wasn't surprised that they would be a group that would look heavy at Mitel. I think what was surprising a little bit for me was that Mitel has a lot of legacy products still, and so I think there's probably a bet that they can really convert a lot of the legacy clients to more of the cloud solution. I think Searchlight and Cirrus were rumored to be bidders for BroadSoft, and so I think this was a way for them to get into the space, yet they paid more for Mitel than I think Cisco paid for BroadSoft, which is a little interesting from a perspective. BroadSoft obviously all cloud, Mitel a lot of legacy. So I guess they believe that by taking them private, they can cut some costs and make it more profitable, make it much more of a growth engine than it is today.
And I guess with the change, they'll be out of the eyes of Nasdaq. They won't have to react quarterly. They won't have the requirements in terms of performance. So that making the change to a cloud company with less scrutiny than if they were a public company, as a private company, might give them more flexibility to make that move.
I think that's right. And given the fact that, they still probably haven't integrated the ShoreTel combination. There's probably some stuff that needs to be done.
But one of the things we're seeing, and obviously it's particularly happening in Europe, is the consolidation, with consolidators appearing, and a couple of them speaking on your panel. People you've worked with, people like Evolve IP and Destiny. Do you think that trend's going to continue? I mean, is it something that you're seeing a lot, people looking at building pan-European providers?
I think we're seeing it a lot still in both the U.S. and in Europe. So we closed 8 deals in Q1, and 5 of those were in Europe in the cloud space, and I find that interesting. And then if you look over on the U.S. side of the pond, you've got Court Square investing in Momentum. You've got Evolve getting very active in Europe. You can see Masergy starting to get active, I believe. And you still have a number of consolidation plays still going on here in the U.S. So I really think that we just started to touch the tip of the iceberg, right? Most of the M&A deals have gone on in Holland, the UK, a little in Germany. So you haven't seen much going on yet in France. You haven't seen much in Southern Europe. There's still a lot of opportunities in the Netherlands, as well as in other parts of Europe, and we haven't even touched Eastern Europe. So I think that, or Scandinavia. So I think you're going to see a lot of activity over the next 24 months.
Right. Well, thank you, Michael, for being our first Summit podcaster. We're going to have a series of these podcasts in the coming weeks, and we're going to look forward to seeing you at the Cloud Comms Summit in end of June in Washington. And really, thanks a lot. Cheers, mate.
All right. Thank you, Matt.